The banks are putting an end to cash withdrawals, and this is happening all around the world and is likely to come to the United States of America very, very soon. And we shouldn't ignore the warning signs that are being thrown out in front of our faces, left and right, with recent announcements made just a few hours ago from the Biden administration as far as these new moves, these new changes to the banking industry, as well as the elimination of the dollar. Digital dollars are coming. Biden coins are coming. Cryptocurrency is out. Are you worried? XRP, Bitcoin, BTC, Ethereum, coin stakers, Binance users, Coinbase users, decentralized cryptocurrency investors. What do you guys think about what's happening? Because we are seeing some clear signs and indications of what is likely being a strong push by Big Brother to eliminate the dollar, completely destroy cryptocurrency, decentralized cryptocurrency, and make a push for CBDC, a central bank digital currency, controlled by the government, watched over by the government, mandated by the government. Folks, please don't panic. Don't worry. I'm not trying to cause fear. I'm not trying to start bank runs. I'm trying to help you guys prepare for what's happening by bringing you guys this information, this news, the facts. I'm not making this stuff up. Additionally, this whole FedNow system, I want you guys to do your own research, okay? I want you to look into FedNow. I want you to look into ISO 20022 or ISO 20022. And I want you to look into CBDC, central bank digital currency. I want you to look into those three things because those three things are working in conjunction together to not only wipe out crypto, wipe out the dollar, wipe out private banks, usher in central bank digital currency, CBDC, all the while we don't have a say in it. Now, let me explain. First, I want to talk to you guys about banks that are putting an end to cash withdrawals. I brought you guys some of this information yesterday, but, you know, repetition is good. Repetition helps you remember these things. And it says that we've taken another step towards a cashless society, and a big bank has confirmed some customers can no longer withdraw money over the counter as branches continue to wind back services. Now, I know I've got viewers from all over the country, but more importantly, all over the world. And I want to thank each and every single one of you for continuously tuning in, supporting, and giving all these videos a like for the YouTube algorithm. I really would appreciate it. Please smash that like button so much. Thank you. But this is, again, a worldwide, remember, World Economic Forum, WEF, the WEF, these elites gathering in Davos are not only trying to manipulate their particular country, they're trying to manipulate the entire world. So we need to be paying attention to what's happening around the world so that we can understand what's going to be happening to us all next. Does that make sense? So this major Australian bank is announcing, or actually major Australian banks, plural, banks with an S, are announcing the end of cash withdrawals in some of its bank branches. One such bank is ANZ Bank, which announced Thursday that some of its branches will end cash withdrawals and will have staff assisting customers to use smart ATMs and coin machines for their deposits. Now, there are a lot of important keywords here, folks. But let's just think about this. We've been spoon-fed this online digital banking, fintech banking system, push, change, revolution, reset for years. To now, we have a generation growing up that's only going to know online banks without physical brick and mortar locations and never touch cash. You see what they're doing here? But what the statements that are being made here is that this is disturbing, honestly, to read. Branches will end cash withdrawals, plain and clear, and will have staffing assisting customers to use smart ATMs and coin machines for their deposits. They only want your deposits. They only want to take your money. They only want to take the physical money in, but they're putting an end to cash withdrawals. So are you picking up on what they're putting down? The decision was made after a significant drop in branch transactions, the bank reported. But why is there a significant drop in bank transactions? Now, folks, again, I want you guys to make sure that you're doing your homework, you're doing your research. You can take this information as a little piece and then add it to the rest of the knowledge that you're accumulating by continuously checking in on other creators, other videos, other people's dogs shaking their tripod while they're trying to record. Thanks, Max. So why is there a reduction in branch transactions? It's because the banks have pushed people out. They've like, I know I'm not the only one who's gone to a bank and attempted to engage with a teller only to be met at the front door in the lobby right after walking through the vestibule by a bank employee, possibly bank manager. And what do they say? Oh, how may I help you? Sorry. How may I help? Welcome to the bank. How may I help you today? And I'm like, well, I just want to go make a deposit. I want to make a withdrawal. I want to talk to the teller about my account. Oh, well, did you know you could do that from the ATM outside? I'm not the only one that's happened to. Comment down below if they've done that to you. They have been pushing us out of the banks, outside of the brick and mortar banks for years. And the crazy part about it is the people that are actually doing it don't realize that they're pushing themselves out of a job. We'll talk about that in another video, but there's a reduction in branch transactions because they've made they've made that happen. Like they've eliminated tellers. They made lines crazy long. They make it more difficult. They've slowed down the process. You think that those computers, those terminals that these bankers use are that slow by accident? I could process, I could compute data for NASA on my smartphone. And you're telling me that the bank, when I'm doing a transaction, has to sit there and type a million keys, type in all this information and then sit there and wait? That's by design. Whoever created this on the other end, the banks are literally forcing these computers to be slow and wait. Why? To discourage people from coming inside. Meanwhile, you go outside to an ATM, that joker's moving, okay? Think about it. Think about it. I'm not making this stuff up. ANZ is also the bank that has been selected to distribute CBDC to participants on behalf of RBA on its Australian pilot program. Central bank digital currency will be distributed to participants on behalf of RBA on its Australian pilot program. Again, folks, globally. And if it's happening there, it's going to be happening here. And again, I appreciate every single one of you, no matter where you are, tuning in and also sharing this information. Please keep the emails coming. They're very helpful to connecting these dots and bringing this information to the masses. But more importantly, somebody actually commented and said, hey, how's Bupe doing? How's she doing? We haven't heard much from her, and she's doing just fine. And she has some smartphone problems, some issues, but I think she got them worked out. But she's doing fantastic. And she's actually, I believe, working on getting her farm. She's in the process of buying her land and getting all that set up. And if you guys want to see that, just let me know. Drop a comment down below. And again, I appreciate you guys for asking. Now, is this a coincidence or is this a deliberate move to push for CBDC? I'll let you guys be the judge of that. Answer, comment down below, folks. But what's happening here? What's happening here? FedNow coming in July, CBDC rolling out, ISO 20022, ISO 20022. You know what? I think Squirrel Tribe and I are going to do a video together today, or maybe a live stream together, where we can further discuss what's happening with this FedNow system, this ISO 20022, this charade, this trying to put lipstick on a pig, central bank digital currency, CBDC, digital dollar rollout. Because I might do a live stream, because I think it's going to be best for us to engage back and forth. You guys can ask questions. We can provide answers. If you want to see that happen, just drop a comment down below. Let me know. Give this video a like. If there's enough likes and enough comments showing enough interest, I'll be sure to make that happen. Squirrel Tribe, I think she's got time today. So we need to discuss this. But More importantly, we are now 3 weeks away from the collapse of Silicon Valley Bank, and the White House proposes a long list of banking reforms, perhaps maybe trying to prevent more banking collapses, more banking crisis, more bank failures, more bank liquidity concerns, more bank runs occurring on a Friday, where the FDIC would send out notifications on a Friday so that people have the entire weekend to stress about it, about the future of their banking system and the future of their money. But they proposed reinstituting a whole host of regulations on similarly mid-sized and regional banks with between $100 billion and $250 billion in assets. And some of the rules sound really, really awfully familiar to arguments made post-2008. Remember 2008? But you know what they say. Every crisis is an opportunity to argue about the last crisis. One key regulation that Biden and the White House called for on Thursday yesterday is a provision regarding compensation packages that would work to disincentivize risk-taking among financial institutions. Disincentivize. And this is how capitalism works, folks. All right, so I can tell you guys right now that I've taken many, many risks in my life with the incentives behind these risks of producing tremendous reward. So what kind of society would we live in if there was no reward for the risk? Let me reread this. One key regulation that Biden and the White House called for on Thursday is a provision regarding compensation packages that would work to disincentivize risk-taking among financial institutions. Look, I don't want my bank going out there and risking it all, but I do think that diversity in a portfolio with, high risk, medium risk, low risk, long-term growth potential, short-term gains, it only makes sense. But you got to be smart about it. You can't just be haphazardly out there just, betting it all. I will say that SVB probably made some poor choices, in hindsight. But it says here it's a rule that was initially called for in the 2010 Dodd-Frank Act, the last time the Wall Street got in big trouble, but fell by the wayside by the end of the Obama Biden administration. And the White House also called for regulators to play their reverse Uno card on the deregulatory reverse Uno card played on Congress. So, bam, take that. Meanwhile, this was played in Congress in 2018, reinstating stricter scrutiny on banks with less than $250 billion, $250 billion in assets, and that's just the start of the overall list of demands. Now, it gets better, folks. Stick with me here. Among the proposals was a call to raise liquidity requirements for mid-sized banks, turning biannual stress tests into an annual event, and shortening the trigger time frame for new stress tests once a bank grows to over $100 billion in assets. And we can see here that Silicon Valley Bank failed their stress test. Who will be next? Meanwhile, the White House also wants to update stress tests to reflect clients' ability to make high-speed digital withdrawals. Here we go, folks. High-speed digital withdrawals, okay? As well as to account for novel situations such as the impacts of rapidly rising interest rates on the banks with a high concentration of low-yield, long-term debt, also known as, AKA, exactly the phenomenon that many mid-sized banks just experienced, okay? So that's what happened with Silicon Valley Bank. Cam Schaff sent me an email. He sends me a lot of emails, but he sent me an email, I think it was yesterday, the day before, and he said that SVB China gave their account holders 2 weeks notice to take their money out of the bank before there was a big problem. I'm not going to necessarily say that that's true. I'm not going to say that it's false. But I will say that the warning signs were provided early on, as we saw BlackRock, Vanguard, Blackstone, they were all pulling money out. Jim Cramer was probably doing the same. They were all pulling money. They were selling off. They were selling off shares of Silicon Valley Bank, okay? But at the same time, Silicon Valley Bank's problem didn't happen in one day. Their problem happened over the course of the Fed continuously raising interest rates making it more difficult for their majority of their clientele, their customers, their depositors, their account holders, startup, high-risk, tech-based companies to gain access to funding that they could afford to run their operations. Also, as we knew that they were struggling and laying off tens of thousands of people left and right. Therefore, borrowing money from the banks at higher interest rates was not a feasible option. So what did they do? They used their capital. They used their cash. They go to the banks and they make withdrawals. But when they make withdrawals, they make large withdrawals. So then the bank, because of fractional reserve banking, this fragile mental construct of this fairy tale of money between, banks and ones and zeros in the cloud, ultimately put the bank in the Silicon Valley Bank in a position where they didn't have the available assets to satisfy the withdrawals. So in order to do that, they sold off some of their treasuries, some of their bonds, some of their investments at a loss because additionally of the higher interest rates. But they satisfied the withdrawals. They gave everybody their money, but they took a 25% hit over time of their assets. Okay. So in this process, they're saying, hey guys, heads up, everybody. They're sending out messages, they're sending out tweets, they're sending out, they're in the Discord, wherever they are. And they're saying, hey, look guys, everything's fine. Everything is okay. But we need to raise some capital. We need to raise some money. So think about it like this. You as an average person making money every week, every 2 weeks, going to work, getting your paycheck, and you get hit with an emergency bill, some expense you weren't expecting. You pay it, which would be great. If you got that emergency fund, just pay it. Maybe you put it on a credit card and you're like, I'm going to pay it off in just a few days. But it has shaken up and disrupted your budget. Therefore, you're saying to yourself, all right, family, no, be calm, don't panic. But we need to go ahead and raise some money to cover this unexpected expense, get us back to a comfortable level. Well, the family panicked. They start telling friends, they start telling their friends, everybody's telling everybody. They say, they about to run out of money. You better go get what is owed to you from them before they run. And that wasn't the case, okay? But that happened over several days. Therefore, the warning of SVB, Silicon Valley Bank, alarming and alerting their account holders, their customers to get their money out weeks before the collapse. Technically, if you want to look at it that way, sure. But that would be no different from a warning of a traffic signal turning yellow from green to let you know that a red light is about to happen. It's normal. But can you decipher? Can you disseminate? Can you take that information and process it and understand what that means and what you should do next, okay? But here's the big issue moving forward, folks. The White House also wants to update stress tests to reflect clients' ability to make high-speed digital withdrawals. High-speed digital withdrawals. This is part of the ISO 20022. This is a part of the ISO 20022. Man, I swear that had to be the largest collective group of landscapers with backpack blowers I've ever seen at one given time. It's crazy. I don't know if you guys can hear that picking up on the mic, but they were going at it. They were going at it hardcore. There will be no debris left after that. I think they're going to blow away the asphalt on the parking lot by the time they're done. So they want to speed up the client's ability to make high-speed digital withdrawals, which is one of the things I want to share with you guys to actually show you the process of FedNow and the ISO 20022 system so that you guys can visually understand and see what they're trying to do in conjunction with FedNow, in conjunction with the future of central bank digital currency, CBDC, as we move away from dollars. Spoiler alert, it's completely ridiculous and total bullcrap, but we can discuss that later. Again, if you want to do the live stream, comment down below. Make sure you give this video a like so I know you guys are interested. So as well as to account for novel situations such as the impacts of rapidly rising interest on banks with a high concentration of low yield long-term debt. Therefore, the Fed's going to continuously raise interest rates. They're going to continuously raise interest rates, and this is going to put further stress on the banks. And the banks are going to experience low yield for a long period of time. Long-term debt this is going to be an issue, not just for the banks and not just for the worry, fear, and concern of possible contagion and systemic risk on bank runs and people wanting to pull their money out, further compounding the negative impacts affecting the banks by having less availability to liquidity, further reducing this this fragile mental construct of fractional reserve banking. I want to say that I think that it was $100. It was either $100. I think it was $100 in the bank in fractional reserve banking. Ultimately computed to, oh man, it might. You know what? It was. I think it was $1,000. $1,000 was the equivalent of $100,000 based on this fractional reserve banking policy and being able to lend 90% of a deposit, which then some banks were able to lend 100% of a deposit. So therefore, think about it. Every time you would remove, maybe my numbers are off just a little bit, but every time you would remove $1,000 out of the banking system through a withdrawal yourself, you would actually remove $100,000 from basically the velocity of money in the economy. That makes sense. That's huge. So imagine what happens when you remove 10,000. Imagine what happens when you remove 100,000 or 1 million or 1 billion. That has a huge impact on a variety of other people, businesses, companies, banks, corporations, relying on this fractional reserve banking system to continuously keep their operations moving. And that's what they're planning on. They're planning on this being a long-term problem, but also sliding in their plan for FedNow, for CBDC, for this ISO 20022 that's just going to try to take over this whole system, put it in the control of the central bank. But we also know that with that comes cons, surveillance, privacy concerns, risks of expiration dates on the funds, negative interest rates, mandates, restrictions, zoning. Think about it. If lawmakers, if the government, if any entity that has the ability to manipulate central bank digital currency usage wanted to create a 15-minute city, they could literally do it by restricting your money in the CBDC system, in the central bank system, to a 15-minute radius. It would be just that simple, just that easy. I mean, right now we are at a point where we are so dependent on, money, but also technology, that literally that would be the fastest and easiest way to control the masses by limiting where and when they could even have access to their funds. And, think about it. Think about it. Anybody who experienced any disruption as a result of a bank glitch, Wells Fargo, Bank of America, Zelle, any of these, and you didn't have a backup plan, what did that do to you? How did that limit you? How did that make you feel? Did you feel trapped, locked in like a prisoner against your will? And that is, taking into consideration a day and age where you have a backup plan of cash. So what happens when the future comes and that's not available? You see what I'm saying? Because cash is no more, fiat currency is no more. Perhaps maybe even we'll see instances like they've done in Nigeria where they'll say you have to turn in this legal tender before it's not valued anymore to get your CBDC. That would be crazy, folks. But it says that the banks, unsurprisingly, are none too happy that they all may pay for Silicon Valley Bank's failure. And it would be unfortunate if the response to bad management and delinquent supervision at SVB were additional regulation, where additional regulation on all banks that would impose meaningful costs to the U.S. economy going forward. And this is according to Greg Bayer, president and CEO of large bank trade group, the Bank Policy Institute, and what he said in the statement. And this makes perfect sense because even Ron DeSantis, governor of Florida, who is adamantly fighting against central bank digital currency, understands the possible implications of the government's actions that would ultimately make everyone else pay for this. But in the sense of Silicon Valley Bank, and then these new rules, these new mandates, this new legislation that'll be passed affecting other banks and basically removing their ability, the incentives to take risks, which can benefit the account holders and the customers as well. You know, the risk and the reward factor here, the return on investment. But it's unfortunate because the bad management and delinquent supervision at SVB is going to ultimately slap everybody on the wrist. Now, you know, was it DEI, and ESG and, you know, all this ridiculous nonsense that was going on at Silicon Valley Bank. I've said it before. I don't care who you are. I don't care what you look like. All I care about is your qualifications, okay? And for a bank to entrust the livelihood and the futures and the financial strength and security of these people and these companies and these businesses and everyone that relies on them, the employees, the payroll, the vendors, everybody, just to check a box, and then these folks are unqualified, absent, devastating. Got to be careful, folks. Got to be careful. But also, this would impose meaningful costs of the U.S. economy going forward. And again, with CBDC, Ron DeSantis has said that this would destroy businesses. It would destroy competitiveness. It would destroy capitalism. And this is not how capitalism works. But I want you guys to really understand this last bit here before I go and before we start this live stream. So if you guys want a live stream doing a deep dive on the CBDC and FedNow and ISO 20022 and what it means and how quickly it's coming, the impacts, the possible negative repercussions we could have from it, and or how we can plan, protect, prepare before it happens, diversity, security, cash flow. I want you to hear this, okay? The White House says regulators could enact all of these proposals without congressional action. Let that sink in. I appreciate you guys watching. Thank you again. Appreciate every single one of you. You don't even know how much you mean to me. Please give this video a like, subscribe to the channel if you haven't already. Turn on your alerts, notifications. Please share this information with anybody you think it'll be helpful to. And I'll see you guys on the next one. Take care. Bye.